Good morning and welcome to Frontier Opening Bell Friday, the 16th of October. Let me welcome my panelists. Onyeka Ijoma from Vegeva Capital is in charge of industrial goods analysis. Oreoluwa Odetide is from Greenwich Merchant Bank. She's in charge of macroeconomic analysis. And of course, Ali Kensacho from Nairobi, the CEO and founder at Rich Frontiers Management. Good morning, ladies and gentlemen. We appreciate you being here this Friday. Let's get on started. Not such a very particularly positive Thursday for African equities, and you can see the numbers there all in the red. Nigeria for the second day still flat lining, looking for what we call a breakout point. So let's go to East Africa. Kenya's economy, the IMF projecting previously 1% negative, says we'll now have a 1% growth. The economy contracted 5.7% in second quarter, much lower than Nigeria's 6.1% for the same period. The IMF and the World Bank is asking fiscal authorities around the world to keep spending and keep borrowing. Don't take your foot off the gas pedal. That's the takeaway from the World Bank IMF meetings. Annual meetings still continuing until next week. We have Sub-Saharan Africa briefing from Emro Abebe Selassie sometime next week. The Nairobi Securities Exchange admitted EGM Securities into its derivatives market as a member. That's a good story. But what about the parliament and the government over the 10,000-acre Miwani Sugar Company Limited property? What's the big problem here? I'm sure Ali would help us find some sugar into that story. The Bank of Uganda is asking customers to update their personal information. Part of the stories from the World Bank, IMF, cyber attacks, and more cyber attacks are happening, in particular during this coronavirus pandemic and a period. Run down to the Tanzania's elections, the country's shilling is in sharp focus. Ali, hit the ground running for us.
So let me start with your World Bank IMF headline, which was that government should keep on spending and borrow more. Look, we've got to realize there's a bifurcation here. In the developed markets, in the US, in Europe, you've got this extraordinary situation where debt has risen very sharply, but costs of servicing that debt have gone down dramatically. So it's a double whammy in favor of these countries. It's pretty unique. In Europe, many interest rates are negative. Governments are getting paid to borrow, and I'm sure a lot of African governments wish that they could get paid to borrow, not least Zambia, I'm sure. So it is a unique situation. The question is, was it manufactured to some degree because of the extraordinary support and quantitative easing programs we've had? And then as an African economist, we've got to ask ourselves, is it possible here? And I don't think it is, unfortunately. So, that headline, I think, refers specifically to, the more liquid and more developed markets. Kenya's economy contracting 5.7% in quarter two 2020. That is the period when we had the strongest curfew and when all the bars were closed. The numbers were quite dramatic. International arrivals were down more than 99%. Hotels and accommodation got hit very, very badly. Agriculture performed reasonably well. Floriculture struggled. But overall, of the first contraction, I think, in nearly 2 decades. So a big hit to the economy. There is a lot of variation between what people are expecting. The IMF took us from -1% to +1% full year GDP. Governor Njoroge, who's running with the Bulls at the central bank, is saying high frequency data in the last 2 months are pointing at growth being as high as 3.1%. That will truly be a Hail Mary result if he gets that. And then I saw an economist, Mark Boland, saying there's no way it can be positive. So a wide range. A lot will depend, I think, on whether we get hit with a second wave. Our test positivity rate has nudged above 10% recently. We're not testing enough, but just to give you an indication that, that second wave that's been hitting Europe can be very quickly imported into Africa. Madame Moetsi at the WHO was speaking about that European-African transmission, which I think was what hit South Africa very badly in the first round. NSE, EGM Securities is a trading member of the derivatives market. EGM came into the Kenyan market predominantly providing derivatives trading internationally. So this is a good development. They've got a lot of expertise. That derivatives market has been very quiet and needs a bit of geeing up, and hopefully they can do that. The government reclaiming 10,000 acres, Miwani Sugar. Our sugar industry has been in the doldrums for a very long time. Cost of production is about 3 times higher than best practice, and we're a big importer of sugar. So I think this is, the government have been wrestling with how to deal with a lot of these sugar companies, which have a tremendous amount of debts which need writing off. And I think this is part of that process of cleaning up the balance sheets and taking possession again. Let me finish with your Tanzanian shilling. You held a very interesting conversation yesterday, which I was fortunate enough to participate in. I mean, we got the election. If you look at social media, it's actually becoming as fractious as I've ever seen a Tanzanian election, because these tend to be, the Tanzanians, I would say, are the most peace-loving of all the Africans I know. But at the moment, there's a lot of friction. You've got quite a strong opposition being met with hundreds and hundreds of thousands of supporters. And a government determined, I think, to make sure that result is not in dispute. But the point is, the shilling has performed quite well. I think it's up or down 2%.
Yeah.
And I think that's about the nature of the Tanzanian economy being quite self-sufficient. You've got a good agricultural base. You're not importing that. You've got the gas now coming on stream. It's quite a self-sufficient economy, and I think you see that in the shilling, which has performed very well.
I agree with mining industry as well. On the other hand, I think it's a self-sufficient economy, like you put it, with tourism and all of that. If you take out the COVID-19 pandemic and all of that, I think it's an economy that's grown about 7% steadily, as you put it yesterday, over a period under Magufuli. But we'll see what the election holds moving forward. Thank you, Ali. Let's talk about the West African market. Nigeria is the big story with inflation. We'll get Oluwa to talk about that in a short while, as well as the NNPC full year 2019 numbers. Bakindo, the Secretary General of OPEC, says the worst is over, but the demand's still very sluggish. Everybody's looking at the November's final meeting of OPEC Plus. EcoBank in Ivory Coast announces net banking income of for the first half of the year, but the ETI, which is the Pan-African Bank, which is EcoBank Transnational Incorporated, announced to the markets in Nigeria, Ghana, and Ivory Coast that its third quarter numbers will be released on or before the 29th of November, because the financial statements are undergoing auditing as we speak. But let me ask Onyeka Ijoma from Vetiva Capital to speak quickly to Nigeria's sugar story. We're talking about, Ali was speaking about the Miwani Sugar in Care. What's the Nigerian sugar story right now for the industry?
Okay, thank you very much, Wasan. The sugar story in Nigeria is very complicated. We have lots of refiners. We have, Dangote Sugar Refinery being the largest. We also have flour mills also refining sugar in great capacity. There was a time that the Porto Group was also refining sugar. But that said, in terms of backwards integration, we have not hit that milestone yet. A few years ago, the federal government came up with the National Sugar Master Plan, basically as a way to support end-to-end production, to processing and distribution of sugar across the country. And we've seen a lot of independent sugar refineries such as Bank Sugar Flour Mills announced major plans to engage in sugar production in sugar cane growing and production. But so far there has been a lot of roadblocks. We haven't seen enough traction in that space. In terms of implementation, according to Dangote Sugar, according to Flour Mills, there's still some way off. Even with the merging of the Savannah Sugar, all this was just to help improve operational efficiency. In terms of the full road to implementation, we are still sort of far off. We can still expect in the short to medium term to continue to import. Raw sugar, especially from the likes of Brazil, and so we'll still be open to the variations of the FX market and the commodity market in that space. That said, we know that there is a plan by the government, and the government is committed to supporting these companies. The issue just comes with the same infrastructure challenges that the broader agriculture sector continues to face. Once we can help solve those challenges, we should see raw sugar production improve significantly in Nigeria.
I agree with you. The National Sugar Master Plan, I was fortunate to be part of that under the Aganga when he was the Minister of Trade, Industry and Investment I think that was under the Obasanjo, so also during the Jonathan's administration. And we all thought the National Sugar Master Plan will open the skies, as it were. But here we are today, a couple of years down the line, it's hardly spoken about in the industry. No one knows what's the latest on that for now. But we'll keep digging on that. Let's see how much we get to know. Let's talk about inflation very quickly, very briefly. Orelu, you're in charge of macroeconomic analysis at Greenwich Merchant Bank. What's your take on yesterday's inflation?
Well, inflation rates at 13.71% was not unexpected. So we are already seeing that upside risk to inflation. Food cost pressures from food items are still the major drivers of inflationary pressures that we're seeing presently in the economy. So we saw food inflation at about 16.66%, which was at like an advancement of about 66 basis points from the 16% we saw last month. So we're still seeing the same supply side factors being the major mover of the sub-index, supply shortages, the late planting season we witnessed due to delayed rainfalls, and higher food prices, and all those other things. So, but for core inflation, we also saw that it went up, but it was not as significant as we saw food inflation go up. It was about 6 basis points. And on a month-on-month figure, it actually declined by 11 basis points. So yes, we are seeing increases in transportation costs, but I think it has more or less stabilized, and fuel prices have more or less stabilized. So that has tempered down a little more. So what we're seeing going forward is that we still expect that, yes, food will still be the major driver of inflation in Nigeria. I mean, when we...
Yeah. Just a quick one, with this massive flooding that we are seeing in the country now, I'm sure, are you looking at anything close to 14% between October and
so
November?
I just wanted to even mention that when we did our projections yesterday, we put out a note expecting that inflation should hit 14.01% in October. So yes, we still expect food will still be the cost of food items will still drive inflationary pressures. There'll be a slight moderation in fuel prices and the likes, but we still expect that yes, food will still drive inflation.
Thank you so much. We really appreciate that. So let's talk about the Southern African market very quickly as we look at the big day for President Ramaphosa unveiling 100 billion rand 3-year economic recovery plan. 800,000 jobs have been promised, massive investments in infrastructure, as well as economic stimulus. Botswana inflation came in at 1.80% in September. In the corporate news, Pepkor says 20% thereabout drop in earnings for its year-ended period. South Africa's Northern Platinum buys back shares preference shares from Zambezi Platinum within that mining industry. And Standard Bank says it's lending on his book, lending to fossil fuels, coal, petrol, and other diesel assets. It's about $4 billion US, as about 0.38% of his books. Let's talk about President Ramaphosa. Do you think, Ali, because I'm sure I saw a couple of headlines this morning from South Africa's newspaper saying, is this the silver bullet for President Ramaphosa just fired yesterday?
I think he desperately hopes it is, because it's been such a tough period. The economy was already weak going into the COVID-related emergency, and COVID was like an invisible and insidious circuit breaker when it comes to the South African economy. There have been so many attempts to encourage that economy back onto its feet. But really, this is his big shot. We'll still wait for Tito to come up with the budget. But, he's sketched out a very bold plan, 100 billion rand, 3-year economic recovery. South Africa's lost 2.2 million jobs, so he's talking about creating 800,000. The proof will be in the pudding, Botswana. I mean, this is an engine for sub-Saharan Africa. It's a sophisticated economy. It's diversified, and it has not been on track now for many, many years. His predecessor drove the train off the tracks in many respects. So look, we can hope for the best. We want to support the president in his efforts. He has shown tremendous leadership, but he's also got a fractious ANC party, which is moving in various directions, and he's got to also do something about the SOE Sept and the state-owned enterprises as well. So it's a big call, and I'm just not sure that there is a clear silver bullet. I think it's got to be more incremental and consistent. But I'm noticing the president's beginning to step up. His anti-corruption drive is now gaining momentum, and he seems to be prepared to go against people, insiders who historically held.
Ali, he spoke yesterday about a 3-year plan. Do you think this 3 years is enough to get South Africa out of the woods?
No, I think it's going to take it's going to be a long haul. I mean, debt to GDP in this period is going to go over 100%. It's assuming a benign situation with interest rates, which might well play out. But it's a massive overhaul. I think it's a decade-long job, and it really requires all hands on deck, and the question is, can he manage that? I think the rand will be the clear barometer as to what the market's expecting. So far, it's been relatively well behaved. I'll just quickly touch on Pepkor sees 20% drop in earnings. Pepkor's talking about provisioning. It's a furniture retailer. Interestingly, in the developed markets, these furniture types have done very, very well, because people were all locked up and they started just doing up their houses because they were trapped in their homes. And most furniture retailers have done very well in the developed markets. So this was an interesting contrast, I thought. Botswana inflation very tame, interest rates at a record low. But the Botswana economy, I think, it's taken the second biggest hit after South Africa in purely GDP terms. And then finally, your story about Standard Bank, that's interesting that they're bringing this to the surface. There's a lot of pressure on banks in terms of fossil fuel assets and lending. But obviously, Standard Bank has to be committed to these assets, whether it's in Nigeria, whether it's in Angola, and Mozambique. They're a player. They're going to have to play the game. But I think it's interesting that they're declaring the number here.
So talking about declaring the numbers, Onyeka Ejema, were you pleasantly pleased that Nigeria's state-owned corporation NNPC yesterday released its 2019 numbers despite all odds and still a black hole on his books?
Yeah, so it was an improvement. I mean, it's still a loss. We're still coming from a deficit. We're still, in a deficit position. Even though it's significantly better, just around 1.7 billion naira loss compared to an 803 and over 800 billion naira loss. We're still seeing the impact of, at least in 2019, we're still seeing, the impact of the should I call it subsidy? Because technically there's still a subsidy on the downstream operations, as the NNPC remains the sole supplier of PMS, in that period. They were bearing most of the cost, and they were just to help sustain the regulated PMS pump price. But not only we saw an improvement in NPDC's books, which is very positive, and outside of that, we saw that the group invested a lot more in exploration and production assets, which is positive. They also gave an update on the annual gas project, which they expect to be concluded soon. Soon in Nigerian political terms is relatively ambiguous, but it was still an update, on that particular front, and they expect that it will be able to, by the time the gas processing plant is completed, they'll be able to service several power stations, which is in line with the energy roadmap plan released sometime earlier this year. So those are the positives from the NNPC results. We do expect that in 2020 there should be an improvement in the retail side, but it will probably be negatively counteracted by some losses in NPDC's books due to the sharp fall we've seen in crude prices. So basically, it seems like every year something basically gives in NNPC's operations, whether it's from the exploration and production side or whether it's from the retailing side. But where we have seen proper good news in the Nigerian space was in Paystack. We had in the presentation earlier. Yesterday we saw the complete Stripe complete the acquisition of Paystack for over 200, reportedly over $200 million, as the company hasn't come out to actually state the number itself. But we know that earlier this year, Stripe raised around $600 million to expand their geographical footprint. They have been invested in. It's important to note that they have been invested in Paystack for some time now, and they've basically been monitoring the Nigerian market. I think that the COVID-19 has been a sort of pseudo blessing to the fintech space in Nigeria, as it has shown the power of the B2B fintech space in Nigeria, as we've seen use of digital of fintech explode since the lockdowns. And this is also very positive for the entire Nigerian fintech space. I think that with a lot of exits and a lot of markdowns and valuations of some of the Nigerian startups over the past couple of years, interest in the Nigerian VC space has sort of been waning for a while. I believe that this should sort of reignite the passions to invest in the Nigerian fintech space, and it has continued to show the opportunities that abound in this market.
Thank you so much. Very interesting story. One big story that excites. Oluwa, do you think at this space that which the NNPC's books are getting, the debts and the losses are coming down from about 800 to about 2 billion, below 2 billion naira. Do you think you will very soon see a whole loss-making NNPC turn to a neuter, perhaps a profit-making?
Maybe not a whole. I don't think a whole. Yes, the government is actually moving towards taking out subsidies, so that should actually impact the under recovery aspect of the financial accounts of the NNPC. So maybe not a whole. I mean, we still have that these refineries are still significantly under utilized. So if you look at July 2019 to July 2020, within 1 year, we've just seen capacity utilization of just about 2%. So these refineries are just incurring costs, general admin costs, maintenance costs, and everything. But no significant revenue is coming in. So I'll just allude to the fact that yes, subsidies will come in. I mean, the removal of subsidies would allow us to see a better performance in year 2020 compared to year 2019. I mean, it's not as if 2019 was all that good anyways. I mean, 2018 was really, really bad. As in, if you look at their books, it was really bad compared to what we saw in 2019. So I think that was what we saw, that improvements, seeming improvement.
Well, maybe this is just the turning point, as we put it. And we think on this side that Frontier Africa reports that it looks like the NNPC joining the extractive International Transparency Initiative is making these reports to come out much more quickly. And perhaps that would be a good, maybe some kind of change is going on quietly on the ground, baby steps into a much bigger reforms that we'll see within the NNPC itself. If there's one Nigerian entity that needs massive and groundbreaking reforms, I think it is the NNPC and so its subsidiaries moving forward. Thank you, both of you. Let's finish up on the North African side. The market wasn't as stellar. Egyptian market fell yesterday. Tunisia tried to remain positive, about 1%. But I love the Nestle Egypt story. I'm sure Ali would love this because 514 million Egyptian pounds into new production lines until 2022. This is big.
It absolutely is. And, as we've discussed before, the Egyptians know how to attract FDI. Nestle, it always makes sensible risk-adjusted decisions, and it's telling us that it is a very attractive destination. Of course, you got an enormous market in Egypt, 100 million, and then you got access into Comesa and all these other markets. But ultimately, every African country should be asking themselves, why isn't Nestle making the same investment in ours? So a big tick for Egypt. Just to touch on Tunisia, by the way, Tunisia currently has the fastest growing exponential growth of COVID cases anywhere on the continent. It's at peak. So keep an eye on that because they're highly dependent on a return of the tourism industry, and that's not going to happen quickly if the caseload keeps driving up. But I think, again, that speaks to the Mediterranean interaction between Southern Europe and Northern Africa, and that's been the challenge for them.
Interesting. Okay, thank you so much, everyone. We have a couple of grounds to cover. I think we'll talk about that on Monday. The Zambia's likely default of Eurobond, it failed to make payment. Angola is also seemed to be caught in anti-corruption issue with the chief of staff to the current president and a few assets being tied to the former president being locked down. Angola is going to be one big news, and Zambia moving forward. Let's leave it there for today. Thank you, gentlemen. We appreciate your time. And ladies, by the way, thank you so much from Greenwich Merchant Bank, Onyeka EGM from Betiva Capital Management, and of course, Ali in Nairobi, Rich Frontiers Management. Thank you so much, and have a great weekend, everyone. See you on Monday.